Hello, hello, hello. Anybody home?
Good day, good day.
How's everybody today?
Good.
Wonderful, wonderful. So 1 week is gone already. Okay. Karen is there. Okay, Karen, I see him. Hello, hi. All right, let's see who's here today, and then we can get it on. See what's on the agenda for today. Anybody had a chance to read some of that crazy OECD stuff on corporate governance? Or you just looked at it and said, oh my God. Anybody had a chance to look at it, took a chance, read one paragraph? No? Ebony, did you read one paragraph?
Honestly, no. I'm going to pull this up now. Actually.
I really appreciate your honesty. You could have said, yeah.
It's been a long week since then.
Trust me, I know. All kinds of things are happening. All kinds of things are getting in the way. Then at the end of the day, you're just like, man, you know what? I should read something, but I'm really tired. I'll do it tomorrow. And then the next day. All right.
Yes, but I'll do better.
I know how it is. So yeah, this weekend, those of you who have been busy the last weekend, please leave your pajamas on Saturday or Sunday and just do a little review so you don't get left behind too far behind. Remember, your first exam midterm is in week number 5. It appears to be a distance away, but it's right around the corner. Okay, we're already in week number 2. So yeah, time flies. Okay, way to go though, Ebony. You could have easily said, I did. I like that. All right, let's see who's here today. Lottie Albury. I wonder what happened to Lottie Albury. Okay. Erica Ba, are you here today? No. Okay. It's only the last of the Mohicans are here today. Okay, Samina Castillo. Hugh Chase. Hugh Chase isn't here yet. Patrice Davis. Okay. Alex Feaster. Who's Alex today? Alison Ferguson. They're still on the way. Shadell McKenzie. Shadell McKenzie. Okay. Shandisha Richards. Shandisha today. Deshaun Roberts. DeAndrea Smith. Biangia Smith. Anthony Stubbs. Okay, so we have a new.
Good day, Mr. Wilkinson.
Yes.
You going in alphabetical order?
No.
Oh,
Yeah, just.
because I didn't have my name.
I know.
All right.
I'll be right back.
All right.
Let me just get my revised list. Just give me a few moments, everybody. Looks like they can't run off with my class list. I'll be with you in a few moments. As soon as I find it. Okay, sorry about that. Let me start at the beginning. Ebonique, are you still there?
Yes, sir.
Wonderful. And India, I know you're there.
Yes.
Okay, lovely. Rosalie. Rosalie, are you there?
She's in the meeting.
Yeah, she's there somewhere.
Mhm.
Okay, Danielle.
Here.
Okay, wonderful. Let's see if I got everybody. Karen, San.
Hello.
Hi, Karen. Were you here last week?
No, I was not.
Okay, wonderful. In that case, you get to introduce yourself before we begin.
Okay. All right. I don't know what I supposed to say. Just my name.
Yeah,
Whatever.
and like where you work, what's your profession? Why are you doing an audit class?
Okay. All right. My name is Karen Sands. I work at Bank of the Bahamas.
Okay.
Yeah, I'm a data processing associate there. I chose to do auditing because I want to see if that's something I want to do in the bank. I'm trying to choose my career path right now. So I see if something, and then have it under my belt is good too,
Oh yeah, auditing is always good to have. I mark
Yeah.
my word. No matter what you are doing, information about how audit works, who does it, what they're looking for, what you're responsible for. It's never ever going to be a waste of time, no matter what area you go into. So one way or the other, you are in the right place.
Okay, good.
So welcome aboard.
Thank you.
Yeah, you missed a little blah 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 last week, but that's okay. It won't take you long to catch up. And so, yeah. Did you get the notes from Miguel?
What they sent in the email?
Yes.
Yes, I got it.
Okay, lovely, lovely. So let's see then. Let's make sure we're all on the same path. All right. Since you were not here last week, Aaron, let me just put up a little bit of information for you real quick before we get started. Try and get you up to scratch as quickly as possible. Let's see, contact information. Okay. Trying to get my contact information here so you can see it. Can you see that, Karen? My contact information?
Yes, I can.
Yeah, just make a note of that.
Hi, hello.
Okay, I got it.
Yeah, good afternoon.
Okay, yeah. That's my name at the top, Samuel Wilkinson, your lecturer. And my email address and cell number.
Give me a total of 21.
Yes, I got it.
Yeah. So if you need to touch base with me for any reason during the semester, feel free to do that. And I usually get right back to my students on these matters. We did have a little discussion about some other things last week. I think we talked about, let's see the other students we had last week. Anybody remembers what we talked about? Housekeeping stuff? Anyone? For Karen?
Meaning of collusion.
Sorry?
Collusion.
Yeah, we talked about collusion. Interesting discussion about that.
When you say the housekeeping stuff, you meaning like the exams and like the
Yeah.
midterm and stuff like that?
Absolutely.
Oh, okay. So I know you said the class is 12 weeks and then we're gonna have a midterm exam during the 6th week, and that'll be for the modules that we do then. And then the final exam will be on the final 6, I guess, the final modules, and it won't be cumulative.
That's right. Okay,
Right.
absolutely. The final exam will be in week number 12, and it will not be cumulative. Meaning,
Are we also supposed to be getting for a what do you call it? A course that an assignment that we would be working on for the rest, a case study for the rest of the semester?
correct. There will be a case study assigned. I haven't assigned it yet because I want you to get a little more information and not focus on that just yet, but I will be doing it very soon, sending it to everybody in your email. So please be on the lookout for that. Take your time. You have the entire semester to do the case study. If you finish before week 12, you can send it in. I will encourage you not to wait until week 12, because then that will be rolling into your final exam and things might get a little weird. So you'll certainly have enough time to do your case study. And as soon as you're done, you're happy with it, you've read it over and all that stuff, and you can send it in ahead of time for sure. 40% will be assigned for the midterm, Karen. 40% for your final exam, 10% for being in class and participating in any discussions we have about audits or anything else for that matter. And the other 10% will be allocated to your case study. Okay?
Okay, yes.
Any questions on all that stuff?
No, it's straightforward.
Okay, absolutely, absolutely. Okay. If you think about anything along the way, of course, now you know how to find me.
Yes.
Wonderful, welcome aboard. Gretchen, is that you?
Pardon me?
Did I
Hi,
show-
good evening. Yeah, sorry, I was in place and my laptop was take like forever to load up. Same thing last week.
Yeah, is it the laptop or the Wi-Fi?
I don't know, like I came home, like reached home like 5:30. I had my computer boot up, but I need a new computer. I just think my computer is slow. And then sometimes I have to update the thing for every time the Zoom.
Oh yeah.
For every time, and it's so slow. I don't know if it's the internet or just I know my laptop's slow. It's
Gretchen,
just
you
like
lucky
forever.
you have a computer. I doing this on my phone.
What?
But I say you can't use it on your phone. I got log in on my phone, but it didn't allow me to.
I use it on my phone. I don't have no computer.
So Rosalie, where did you get that super duper phone from that works on your phone?
You're right, because I know they say it ain't gonna work on your phone, so I didn't even.
This
I
thing
mean, I
even
tried
on
it.
I use my phone. I use my
Samsung
phone.
A20.
Last week I was using my iPad, so I don't know.
That's
And I
interesting.
have an iPhone, so I don't know. So I have my old laptop, but I had from 2016. I need a new one. Because this one has helped me waiting like for over an hour.
Yeah, and when exam time rolls around, you definitely want something that you can rely on. Not that she won't hold up, she'll just frustrate you a little bit. For sure. Okay. So if it still works generally, that's fine. But of course, first chance you get, yeah, you definitely want changing the old girl.
Excuse me, Mr. Wilkinson. I don't know if you discussed this last week, but in terms of the exam will also be virtual as well. And how will, I just want to know how will we be taking the exam virtually?
Yeah, that's a good question, then. I'm going to speak to Miguel and company about whether it's going to be in-house or virtual.
That'll
I
be
know-
in house.
Yeah, I know recently examination classes were held virtually and then examinations were done in-house. So I'll confirm that with Miguel and let you guys know by email or next session, okay? Whether it'll be virtual or in-house.
Thank
Sure.
you.
Question. All right. Certainly not a question you want to wait to ask at the last minute for sure. All right. So if there aren't any other questions, and of course, you know, I told you in this class, it's a very interactive class. You can say anything anytime. There's no set time to say anything. All right, but if there isn't anything pressing at the moment, then we can just continue on. I think we were talking initially about looking at the introduction, an overview of auditing, talking about all the great things auditing is about, what's about to do. For those of you who are looking for the appropriate notes, we're looking at the very first set of notes called Introduction and Overview of Auditing. So that would be the very first set of pages that you have. Should be about 21 sheets altogether. We talked about the origins and evolutions of auditing, where it came from. It's an old profession. It's nothing new. It's been around since forever. Comes from the Latin word audire, which means to hear. And back in the old days, accountants would go into companies and businesses and do a hearing to see whether or not they were hanky-panky or not. And nothing has changed. We're still going into companies to see whether they are hanky-pankying or not. Okay, interestingly enough. All right. And that's for you history buffs who actually have any interest in where the heck auditing came from to begin with. The definition of auditing, remember we talked about that. The Spicer and Pegler said some stuff. Go in and check the books to satisfy yourself that the balance sheet and income statements are true and fair. That's a nice test question. Define auditing according to Spicer and Pegler, or just define auditing. And if that comes up, then that's all you need to say to get full credit. Okay. And so a couple of definitions were given.
Sorry, can you repeat that again? Which page is that?
That is on page 2. The second sheet on the definition of auditing.
Okay.
Yeah,
Thank
just that's one of the things we discussed last week. I'm just saying that's a nice little quick test question, like define auditing, or according to Spice and Pegler, auditing means what? And then you just let it rip and move on to the next question. All right, we looked at some of the features of auditing. And again, my examinations are not really designed to make you miserable. They're going to be very, very fundamental. As long as you read and do your reviews and all that stuff, you shouldn't have a problem. Now, if you don't read it anymore and you don't review anything, then things get a little hairy. It's like, I don't remember a bloody thing because you've never really gotten intimate at all with it. But once you've read it up and set up your notes and study things the way you study, you should be fine. There won't be any surprises. Okay? We talked about some of the features of auditing. It's a verification process, reviewing the accounting systems. It's done by independent people. It's scientific in nature. These are all features. And again, short answer question to me would be list 3 features of auditing that we discussed. And if you've done any work at all, you'll just throw 3 down and get 3 easy points and move on. Okay. The objectives of auditing, we said there were 2. Anybody remembers what they were? The 2 primary objectives, or the 2 key objectives of auditing. Why do we audit at all? There are 2 main reasons. What are they?
Well, from what I was reading, it's to give a true and fair view of the financial accounts, and not so much to find frauds and errors. Well, that is the secondary objective, because when I first thought about auditing, I thought it was just to go in there and look for errors and stuff. But as I was reading it, I realized that that is something that can come as a result of trying to find the true and fair view of the financial accounts.
Now, Rosalie, you're sounding like a real pro already. You thought, no, that's very important that you recognize that I thought it was to find errors initially, and then I discovered, wait a minute, we'll find errors and frauds as we check out the real purpose, which is to find out whether the information is true and correct and meets the requirements of generally accepted accounting principles. Absolutely right. Okay. So the primary, so the objectives of auditing are twofold, and I'm just giving exam hints already, just so you know, so you can be a little excited about this crazy course. the two key objectives of auditing that we discussed were the primary objective and the secondary objective. Okay, so if you know those two right away, you get points.
The secondary is easy because it takes you back to the origin of audit.
Absolutely.
So
And so be ready, because I'm probably not gonna just say state the two objectives. I might say state the two objectives and describe each one. So you'll say there are two objectives, primary and secondary. Primary objective means we check the balance sheet to see if it's true and fair, and we check
Right.
the profit and loss account to see what the financial period looks like. And then on the secondary, we satisfy ourselves with regards to what?
incidentals,
Yeah, such
because
as,
in an assignment that I am working on now, I noticed that they have something incorporated, what they call incidentals.
yes,
All right, and that's anything that's not expected or to really happen, or
Right.
it's like stuff can happen.
right.
So I'm starting to tie everything in.
Isn't that interesting? How things start to tie in once you get muddled up with stuff like
But
this.
incidentals, right? So I get a more definite meaning of the word incidental.
Yes. And in your notes, you'll see on the secondary objective that the incidental objectives of auditing are, and they tell you clearly, one, to detect and prevent what?
Fraud,
And to detect and prevent?
errors.
Yeah, those are not the primary objectives.
Those are the secondary.
That happen to be incidental for auditing purposes. A lot of people don't really want to accept that because they think that the auditor's primary job is to come in and find out who teeth in. How's that? That is not the primary job. However, if in conducting the primary objective, they discover some secondary incidental objectives, then whoever is teething in Bahamianese will be gone. Hopefully, but not necessarily. Because sometimes, depending on who's doing the stealing, like maybe somebody in senior management, well, if that happens and the auditor is compromised in any way, then the auditor may not disclose it, or the auditor may take a bribe to not say anything, which of course is totally unethical. Should never happen. When you can't trust your auditor, that's not like not being able to trust your doctor. Can you imagine that? You can't trust your doctor. How spooky is that? Okay? And in the financial world, it's the same correlation. You cannot trust your auditor to do the right thing. That's spooky. Unfortunately, we do have unscrupulous auditors as we have unscrupulous doctors. Did you know that? Did you know that not all doctors are honest and ethical? Did you guys know that?
Yeah.
I hope so. Take off your clothes. That doesn't mean they're doing the right stuff. We hope they're telling us the right thing, but some of them are not ethical. I saw an article about a year ago where a doctor was finally found to be fraudulent. He was telling his female patients that they had breast cancer for years. And he was treating them for breast cancer, which they never had. And why was he doing this? Because every time he started treatment for breast cancer, he would charge exorbitant fees. So he became a gazillionaire by lying to patients that they had breast cancer when they never had breast cancer at all. The flicking dude was giving them radiation and all this kind of stuff and charging them every single time. Imagine that. I don't know if that's primary or secondary, but it's sure as hell illegal, immoral, and unethical. Okay? So yes, the secondary objective is incidental, and please make sure when you're reviewing it, you know the difference and you respond in a way that you understand the difference between primary and secondary. Okay? Way to go. Very important concept in the audit process. Okay? Does anybody remember the difference between an error and fraud that we discussed?
Yeah, fraud is intentional. It's intentional means to deceive,
And errors?
and the financial errors is an error like unintentional, like we make errors.
Yeah,
It's not intentional, but when
unintentional.
you commit fraud, is you're trying to deceive or misappropriate funds, stuff like that.
Indeed. And don't complicate it. Whenever somebody commits a fraud, from here on in, you can say without a doubt, it was intentional. Whenever somebody commits an error, 99.999% of the time, it's unintentional. That's the big difference. Okay, in case you ever wondered. Clearly, they're not the same. Okay? We also discussed 3 forms of frauds typically that can occur in any organization. Anybody remember those 3 forms of frauds?
Manipulation of accounts,
Yeah,
misappropriation of cash and goods.
yeah. And what do we mean by misappropriation?
You using funds like
Or embezzlement or misusing the funds or thieving.
Yeah. let's do the exercise. Let's do the exercise real quick. Somebody who has Google on the phone or computer, type in the word misappropriation. And let's see what Google says, since we have so much faith in Google.
It's actually using the funds which is not for the intended purpose.
Is that what Google said?
No, it says the action of misappropriating something, semicolon embezzlement.
That's it?
Yeah.
What the hell? Like, Google is on vacation when they came up with that. Okay. But in any event, all 3 of those expressions are correct. Okay. Interestingly enough, they said embezzlement. So now they've taken us from one explanation that's not fully explained to another one called embezzlement. So the person who's trying to find misappropriation runs into embezzlement. So they're stuck. What do you think they're stuck on? What the hell is it? Embezzlement? Anybody knows? What is embezzlement? You pick up the newspaper and see a politician has embezzled money. What does that mean?
Using money and then trying to probably make it look like you use it for something with the company, but that time you actually using it for your own personal gain.
Well, let's Google embezzlement then.
It means theft or inappropriation of funds placed in one's trust or belonging to one's employer.
Yeah, using the money in a way that you're not supposed to, specifically with regards to your employer, for sure. Very common problem. People are running off with the company's money all the time, from the board all the way down to the janitor. Janitor? Can the janitor misappropriate goods?
Yes.
By what would she do? Or he?
You go use the joy and clean a car.
Or carry the whole box of joy home.
Yeah.
Yeah, not just clean a car.
Use it for a personal gain.
Yeah, carry the whole. She'll go in the storeroom, right? That nobody's checking. And she sees like 17 boxes of joy. She says, I need joy home for my dishes, and they don't pay me much in this place anyway. And they're not gonna miss this one box. They have 17. And so he or she just picks it up and walks off with it. That is called misappropriation of goods. And again, one of the control features that companies are required to have is to ensure that these things are secure. Otherwise, folks are going to walk off with them, correct?
Yeah.
Yeah. And so when the auditor walks into your firm and sees that these kinds of weaknesses are, while he's checking financial statements and records and accounts and all that stuff, he sees these things, control weaknesses, he has to make a note of them. Even though he may not have come in initially to see whether or not the storeroom had a bloody lock. But for your information, a storeroom that does not have a lock and somebody managing the requisition of goods coming in and out, depending on the size of that company, they can lose millions of dollars a year. Did you know that? Did you guys know that?
No, it's not.
Yes.
Supervisor NASA alone has mentioned some time back that they lose hundreds of thousands of dollars every year in the inventory that is stolen by staff members. Sometimes they catch them, sometimes they don't. But they know that they go missing because they can tell the difference between what they sold and what they have left in inventory. And they cannot account for the difference. And typically that means somebody or bodies have misappropriated the goods. Right?
Hospitals and pharmacies, yeah.
Of course. Oh, the one hospitals and family, you definitely have to watch those things, especially expensive drugs. So bloody expensive anyway. Folks need to run off with some of them. They overcharge people. But anyway, especially poor elderly people. So when you guys take over the country, you can look after trying to reduce the price of pharmaceuticals for poor elderly people who can no longer go out to work. And some who even can work, they don't give them a job because they say you're too old. Your hair is too white, go home and sit down. How's that? Is that fair?
Not at all.
Not at all. As long as they're healthy enough to work and think, they should be able to what?
The Bahamas does it on a normal basis.
I know the
Government.
world. Yeah, because we copy.
They post jobs 18 to 25, or they discriminate on a normal basis in this country.
Yeah, because we copy everything the world does, especially Uncle Sam and Canada. Everything that goes on in the UK.
They don't discriminate the way they. I think we're worse than them.
No, we're not worse. It only seems that way. If you were to go and live in those countries, you'll find that, well, you might have a point, relatively speaking. I'd hate to think so. That's a terrible thing. And this small little rock. All right. So frauds can take the form of manipulation of accounts, misappropriation of cash, and misappropriation of goods. These are all very critical issues. See, if you just look at them academically, the way we're looking at it now in the textbook, we're like, oh, yeah, okay, fine. But I'll tell you, when you get your imagination going and do a little research to find out how many accounts and cash and goods are really misappropriated and manipulated within a particular year, we're talking gazillions of dollars beyond your wildest imagination. Okay? A lot of these things are happening even in the firms you work for, you just don't know because they hide it, they cover it up. Every now and then something might quote unquote blow and you hear something, but what you hear is nowhere near what actually goes down in your firm, other companies, countries, and around the world. Misappropriation. My. Did you guys remember? Do you guys remember the earthquake that took place in Haiti many years ago?
Yes.
Yeah, for sure.
Yeah, when everything and then do you remember that countries, people all over the place are donating millions of dollars?
Yeah.
Does anybody know where the money went?
Not sure. I was
Nobody.
hearing about that.
You mean
Even
the
even in
Hillary,
reference to
Hillary
Dorian.
Clinton, the Clinton Foundation, talking about?
Yeah, but where did it go?
It's going right to Haiti.
Really? Okay, all of it?
I can't say.
I know nobody has said anything. How about that?
What happened to where the money gone? They promised to fix the people house with an Hurricane Dorian.
Same thing. That's my point.
Exactly.
Why didn't they have the people, company, department, whatever, audited to see where the money was? See, audited. That's the class you're doing, isn't it? Isn't it?
Yeah.
Yeah. Why weren't they audited to see if there was any manipulation or misappropriation of funds, right?
Shouldn't they have been audited? Is it like legal for them not to be audited in a case like that?
Well, we just saw the Auditor General say the other day that they cannot account for some money that was allocated for feeding because they can't find all the receipts and paperwork to substantiate the money that was supposed to have been donated. That's all we know so far. The question is, why not? And who are the people involved? And will they be prosecuted? See, will they be? Anyone?
Most likely no.
As usual, no.
So, what the thing name what they used to have now back in the day? Where the people say I plead the fifth.
Yes, that's
What
that's
is the name now?
well, which one of the things? Plead the fifth is just one of many things.
No, man, but when they okay. Oh, what they had back, they used to have it sometimes like a trial,
Commission,
not commission. What? Oh boy,
commission of
yeah.
inquiry.
Commission of inquiry. I think that's what the term is.
That could be the only trial in the context that you mean.
Right, and they say I plead the fifth or something like that.
Yeah, that can happen in
or I do
court.
not recall. But they
Yeah,
just I do
yeah,
not recall.
Yeah, the commission. The point is, they say 10 million rent cannot be accounted for. Some aspects of 10 million cannot be accounted for. Who was responsible for it in the first place? Who received it? Who's responsible for making sure it was disbursed correctly? Who's responsible for keeping the receipts? Who's responsible for having the thing audited so that we can make sure that all the money is accounted for? Who? We don't know anything about any of the who's. None of the culprits have been named. How about that? But for one of you who may be working in the bank as a teller, if you take $20 to buy lunch and put gas in your car and they find out, they'll call you a thief and fire you, wouldn't they? Wouldn't they?
Yes, they will.
For $20. So what's the story with 10 million? Welcome to the world of auditing. If the auditor ever gets to get the responsibility to
Auditing
check,
is a tedious process. Jesus.
not only is it tedious, but to be an auditor, you have to have the will to be independent and to not be swayed or bribed or directed by anyone. See, the tediousness is the easy part. The hard part is when somebody is trying to get you to not do your job professionally and ethically. Do you understand? In other words, if you're an internal auditor and you find something wrong, somebody says, I'll give you money if you don't talk. I'll give you a car if you be quiet, and you agree. That's the hard part of the auditor's job. Taking bribes, taking money to be quiet, lying about the results of their findings to the relevant people. My. So if you think the work is a challenge and going through the paperwork and checking things, welcome to the other side of the fence, which is the auditor's opinion and report. If you look at page 5, we talked about that last week, the expression of the auditor's opinion. Okay. So when you're going over that again, please take note that all kinds of things come up when we're talking about the expression of the auditor's opinion. Because then we go back to what is the objective of the audit, what are the goals of the audit, and can they be attained? Are there any constraints in the auditing process, anything that's going to cause them not to do the job properly? What happens if you find too many frauds and errors? Are you going to reveal the source of those frauds and errors and who's responsible? Or suddenly, on the expression of opinion, it gets interesting. Okay. And again, we go right back to our discussion. Remember, the original thing for auditing was thought to be accuracy of numbers. Then we discovered, wait a minute, that's not it. I think Gretchen said it earlier. It's not really necessarily accuracy of numbers first, but rather to make sure that the form of the financial statements are properly done. Then, as we go, we check for accuracy and frauds and errors. That's how it works now. Some people, even in today's modern environment, auditing environment, still don't accept that. They still think the first primary job of the auditor is to find errors and frauds and to test to see if all the numbers are accurate, all the numbers add up. That is no longer the primary objective. That is now the secondary objective. All right. Some auditing firms don't look at it as primary and secondary. Some of them look at it as simultaneous. They're doing both at the same time. And that's fine. if they want to do that. At the end of the day, you have to make sure that those financial statements are true and correct. And then if we discover any problems, errors, frauds, etc. along the way, we have to report that. Okay? Simple as that. And then we looked at a long list of frauds through defalcation. And believe it or not, that list is not exhaustive. Persons raised the question before, do you have to know every last thing on the list? Well, you don't have to know every last thing on the list. For example, we looked at about 20-something defalcations. I'm not going to say right at all 23 defalcations at all. Does that mean you shouldn't look at half of them? No, it doesn't mean that. You still look at it and try to remember as much as you can, like what they are and what they mean. Like number 23, the last one. Okay, on page 8. Misappropriating undisbursed wages. Does anybody know what that means? Anyone? Make a guess. Misappropriating undisbursed wages.
Let's paying yourself twice.
That could be, yeah, that could be one example. Paying
So
yourself
of course,
from
another
somebody
example could be if a person is fired and you still have them on the payroll.
Yes, the person is fired or dead, or fired and died, even, and they're still on the payroll. And who's getting the money? The person who's keeping them on the payroll. Imagine that. Happens at NIB all the time. Anybody knows how?
Well, when the person's, I think that's the reason why they came up with the fact that you have to come in and be verified after a certain time.
Every 6 months.
Yeah, every 6 months, yeah.
So at least under the, see, now that's called an audit control. Do you follow, folks?
Yeah.
That's called a control measure, so that, because what has been happening before that control measure was implemented years ago, people would be collecting pensions for their elderly, mom, grandmother, grandfather, grand aunt, whomever it might be. And then these persons would die. And since the money kept coming to the account, the family members kept collecting, they would never tell NIB that the person has died. And in some cases, they were collecting for years. How about that? Before somehow NIB discovered that the person had died a long time ago. Okay? And so as a result of that, no doubt in related matters, they decided, you know what? We need a control in place every 6 months. The person has to confirm that they're alive and well. They have to come down here. They have to go to a lawyer who signs an affidavit and says this person is alive. And the reason why they do that, so that if something goes wrong, the lawyer will then be liable to NIB for lying. Do lawyers lie? Anyone?
That's their job sometimes.
For some of them, it's the normal day's work. Should they lie? No.
So
But
they be lying? I don't think they be lying. They just find the loopholes in the law.
okay, Gretchen, that's another way to look at it. They do find the loopholes in the law, but loopholes in the law are not the same as lying. So your point is, you have a good point. Many of them are shrewd enough to find the loopholes. That's not illegal. That's not lying. But some are outright liars. Like, for example, when you leave your deposit with them for a property deal and they use it for personal purposes, and you ask them where your money is, they say it's on their account waiting for the transaction. That would be a lie because they've already spent it. How about that?
Okay, now you see why I don't, part of them on a PEP list, high list.
Indeed, indeed, because everybody knows that lawyers, and especially, make all kinds of deals with money launderers and others. That doesn't mean all lawyers are guilty. That's not what we mean. But we know that by given the nature of that work, that they are constantly involved in doing work for money launderers, drug traffickers, pedophiles, and God knows who else. Because of money, money, money. money. People will sell their soul to the devil, turn in their mother, break their grandmother's neck for money. Sounds almost impossible, but it's not.
Mr. Wilkinson, another thing about that lawyers putting monies on their accounts.
Yeah.
What they aren't supposed to do is put it on an account that is interest bearing as well. And they do that as well.
Of course, which is unethical. It's not illegal, but it's unethical. So they're not all honest and ethical like they should be, just as it is in any other profession. Not even all priests and pastors are honest and ethical, and they're supposed to be men and women of God. Not Tingham them, God, G, capital G-O-D.
Well, you know, witches and warlocks reside in the pulpit. We all know that.
Yeah, we do. And congregations oftentimes know and still entertain them. Say, that's my bishop. Don't touch him or her. My. Interesting. Yes. Okay. So will I ask you to list all 23? Okay, no. But I might say list 2 or 3 or 4. And I expect you to be able to pull a few of them out because of your review. Same thing with our discussion on fraud through manipulation of accounts. All we're doing is putting stuff in the general ledger accounts that shouldn't be there. That's pretty much what's happening. Okay, posting things to the wrong account so that we get high transactions. Anything, any activity in the general ledger account, in the financial statements, in the GL or general ledger of a company that is done inappropriately and incorrectly is a form of manipulation. Sometimes it's an error, which is unintentional. Other times it's fraud, which is intentional. We know that. We're experts on that now. Okay. Notice we are told. Let's go to page 8, the top of page 8, or is that the top of page 9? Yeah, top of page 9. Fraud through manipulation of accounts. Everybody see that? Does everybody see that? Fraud, yeah.
Yeah.
This particular concept in auditing occurs when accounts are presented in a more favorable way than they really are. For example, if you pick up a profit and loss statement or income statement and total sales are listed as 10 million, when in fact, if you go to the records to check the sales slips, you discover that total sales are really only 5 million. This is called manipulation of accounts. This is called window dressing, showing the wrong picture to give a more favorable outcome than really occurred. And oftentimes, where does this occur?
Thanks.
Who are the culprits normally for this stuff?
The head of the company, the managers and stuff.
Yeah, top management.
Mhm.
Okay, they're the ones primarily responsible for window dressing, manipulating accounts, showing things in the accounts that are not true and correct, getting together to tell the chief financial officer to fix the numbers, show more, show less.
It's not like a Ponzi scheme.
Well, not quite a Ponzi scheme,
No, I mean not a scam, but
but
remember when they was, I remember a story similar to that when they was stealing the money and making the people who invest in it believe that they were actually making profit.
well,
And so other persons will keep like investing because they made the books look good.
of course. Okay, that is an example. On the
I-
investment side,
Mr. Wilkinson, I can give you an example. I can give you an example of a Bahamas place that did it, and I get beat up because a lot of Bike to Bahamas people on here.
that's okay.
But years ago, right when the stocks had dropped for BOB,
Yeah,
BOB was accused of cooking the books.
no question about it. I was alive then, as I am now. And it's public knowledge, no question about it. Okay? And the question is, was anybody prosecuted? No. And this cooking the books thing is exactly what we're talking about, what we call manipulation of accounts. Making numbers a certain way to satisfy some requirement, to satisfy some objective, typically from top management, the board, and senior management of the company, as it was with the bank. Okay? A couple of years ago, you guys might remember the bank declared some $500 million that they were writing off to go to Resolve. Anybody remembers the name Resolve?
Yes, I do.
Yes. So the losses were transferred to Resolve and taken off the books of Bank of the Bahamas. Now, this is public knowledge. It's not a secret. That
questionable.
is a form of manipulation because technically, if Bank of the Bahamas had $500 million in bad loans, it should stay there while they try to collect the money. Instead, in order to make the financial records look better, they removed it from the financial statements, transferred it to a special purpose account called Resolve, and Resolve is supposed to be resolving the matter, collecting the $500 million. That is a whole different story. Most people have even forgotten the first letter in Resolve, not to mention what results are they getting? How much of the 500 million, which happens to be equivalent to $500 million, have they collected so far? Well, have they been audited since the money was transferred, the bad debts were transferred? We don't know. Should they be audited to see whether or not they're following through with the mandate? Of course. Why do we bring it up? Because this is an audit class. And we're here to talk about not only the process of auditing, but the importance of it. And sometimes the importance is more relevant than the process initially. If you could have the process down pat, but if you get the objective wrong and don't do it, then the process, being able to do it well, doesn't help because nothing gets done. When are we going to get a report, an audited report on the results of Resolve so far? Nobody knows. It's not like it was just 50 million or 100 million. We're talking $500 million in bad loans. Okay, budding auditors. That's not a secret. That's public knowledge. And has always been. It's unfortunate. But again, Bank of the Bahamas is not the only person. Bank of the Bahamas is a babe in swaddling clothes when it comes to all this crazy stuff. Other companies in the Bahamas and around the world, especially around the world, they're involved in tens of gazillions still. That 500 million is a joke, a drop in the bucket. My. All right. We also talked about what kinds of things will cause an auditor to suspect fraud. You might want to make sure you can identify some of them. We have a whole list again. Most of them are pretty straightforward if you stop and think about it. One or two might not be so straightforward, like fluctuation in gross profit and net profit ratios, because you guys may not necessarily have an accounting background or a strong one, but that's okay. Just being aware. Just for your information, gross profit, by the way, is really just an accounting term that means taking your total sales and subtracting cost of goods sold. The difference is gross profit. And then we subtract all the other expenses from gross profit, and then we come up with net profit. And what we mean by fluctuations is that these numbers on the income statement can be manipulated. And the ratios to show, if we want to show a higher gross profit, we can manipulate the numbers so the percentage is higher. We want to show a higher net profit, we can manipulate the numbers, show that the net profit percentage is higher, so that when we go to the board meeting, the shareholders will think that the company is doing fantastic, give the board members a big, fat, juicy raise and bonus again, and so on, not really knowing that the numbers were fabricated and so were the ratios. My. But certainly others matters that can cause an audit to suspect fraud. Many of them you already know. For example, number one, on page 9, when vouchers, invoices, checks, and contracts are missing. Like, excuse me, can we see the contracts for this? We can't find them. Okay, fine. Can we see the vouchers to check these? We can't find them either. Where are the invoices? Thing and she left the company. Nobody knows where she put them. See, that kind of stuff will make any auditor suspicious immediately. And even if you're telling the truth, they're still going to be suspicious because those kinds of things ought not to happen. For sure. The trial balance doesn't balance. If two debits are different from the credits, and then you can't find the difference. It's out by $357,296, and nobody could find the difference. That would make any auditor suspicious. See, these kinds of things. And this list goes, this is not so long, but it gives you an idea of the kinds of things that will make your auditor suspicious. And even though you might just be an employee, like you guys, for example, it's still good to know in case you're supervising people, you're doing a job yourself, you come across some crap that makes you nervous because, hey, wait a minute, I saw this somewhere. What the hell? Okay, and then as a result of a class like this, you're not only more aware of what's going on, you can communicate better and you can deal with matters better because now you have information that other people don't have and you didn't have before. So you do not have to be in the audit department to find this useful. Any and every employee in every firm can benefit from these issues that concern auditors. No question about it. So whether you're in internal audit, external audit, compliance, risk management, or just working with the firm, it's important for everyone, from the board all the way down. Okay. All right. Did we talk about how to detect errors? Anybody remember?
I don't think we got, I'm not sure, did we?
I think we probably stopped at the just above there with regards to how to suspect fraud. So then let's just go into what comes next and naturally, and that is how do and can auditors detect errors? And we are told that there are a whole stack of procedures that auditors can adopt to detect errors. It's a nice list, not too long. 13 items, but it's not exhaustive, but these are some of the key things. Okay. For example, according to your text, what is the first thing the auditor might do to detect
Check
errors?
the opening
Number one,
balances from the balance sheet of the last year.
why would he do that?
To see if there's a drastic change in the figures.
Well, not only drastic, any at all,
Right.
because the balance at December 31st should be the same as January 1, okay?
Right. Yeah.
But if somebody knows that the auditor isn't checking, they could change the numbers, can they not?
Yeah.
I tell you, for those of us who are honest and upright and don't get caught up in all these kind of things, it's almost unbelievable or unforeseeable that these things happen. Maybe that's why you can't even picture in your mind. People really do that? Yes, they do. 10 times worse. Do they really change the balances from one period to the next? Yes, they do. Why not? Every weekend, 2 young men are actually killed in Nassau. Is that true? Anyone?
Child, that's right.
Is that true? So is that true or is that just fabricated?
That's fabrication.
That's not true?
Been trending lately.
They've been trending lately for real.
They've been doing what?
Trending.
What
It
does that
wasn't
mean?
always the case.
What does trending mean?
Like happening
Coming up
like
and
now or common like common thing
Yeah. So
in recent times.
yeah, every Monday you pick up the paper, 1 or 2 young men are shot to death. True?
Yeah.
Yeah.
They won't come to audit class. They won't be doing foolishness.
Yeah. Why would they want to kill each other, you think?
They got no sense.
Wow.
No principles, no value for human life. money, all that.
But I mean, weren't they little boys in primary school innocent like 10 or 15 years before? What happened?
Some people just products of the environment.
I guess swayed by others.
Who do you think is responsible for their character?
No, they say.
No, children.
Everybody know right from wrong and how to say yes or no.
But when do we?
It don't be everybody, so that's what they choose to do.
They choose to do that?
Mm-hmm.
Okay.
They choose to get mixed up in gang and thing. That's a choice.
So how do gangs come about?
People who probably didn't have no real love in their life.
Who's responsible for that?
I think like gang bosses, they see potential people who they could recruit and prey on, and usually they prey on people who come from communities
Wonderful.
where they have lack of resources and stuff like that. It's easier to mess with those type of people or recruit those people.
Or people.
Okay, so parents are not responsible for what happened to these children.
Yeah, to a certain degree,
For
yeah.
the most part, yeah.
I don't have nothing to do with a single parent.
No, not single parent or not yet, just
They
parents.
believe it. Single parent home or the worst. Like, yeah, nope. I don't.
Parents, do parents have anything to do with these children going astray?
Yeah,
To a
sometimes
certain
parents go
extent.
astray.
Yeah.
And then too, you gotta be careful who you have children with. Some people
Well,
just
that's-
go on with family, they call it, iniquities.
Yeah, and to take your point a little further, why do you have to be careful?
See these people that do man, these people showing their baby picture. You ain't know who they have children for. You have to be careful because there be iniquities, and the Bible speaks of that. From you have children with certain people, you turn them born cursed.
The children born what?
Cursed.
Children are born cursed?
Yeah, they can't help it. Iniquities.
We're all born cursed.
And everybody have generational curses and things like that. Some
No, generational curse is different from being born cursed.
iniquities. That's the same
Yeah,
thing.
remember, everybody in the world is born in sin. Every one of us. That's why those of us who believe in the Bible, where it says train up a child. Because
And they spare around spoil the child.
yes, exactly. Since we're all born in sin, those of us who are better people, we are better people because we had people who taught us to be better.
And they never used to spare the rod back then.
So who's responsible for what's happening?
The parents. I know we have society raising children if they don't want to discipline the children.
Well, let's call a spade a spade. The parents are responsible. A lot of parents don't want to take responsibility, but they're still responsible. Doesn't matter.
And then you have some parents who cloak their children.
Well, that's part of the
And
problem.
they can see especially the mothers, they can see no wrong their children do.
Like I said, all of that is part of the responsibility, not to mention missing absent fathers, see? All of that together means the parents are responsible. Yet the children have to take the blame, and many of them die in the street as a result, wondering what the hell happened and how they became that way. Because most of them don't really know.
Believe in a father. I don't believe I grew up in a single parent home. I don't believe it have nothing to do with the missing father.
Let me tell you something.
That's a blame society give it for to give a reason.
Listen, let me tell you something. I understand your point.
I won't use it. You have children that growing up with both parents and the fathers them lousy, so it don't make a difference.
No, remember I didn't say whether they're in the home or not.
You said the father's missing, so it's the same thing.
Yeah, you could be home and missing. Gretchen, you didn't know that?
I still don't think it have nothing to do with the fathers being missing.
It does, Gretchen, whether they're in the house or not.
I don't think so.
It has a lot to do with it because a lot of times children act out when they are missing something, and a lot of times they grow up seeking something that they did not have, especially with females.
Let me tell
but
you.
Like I said, I grew up in a single parent home, and I didn't know I wasn't missing no father. I didn't know because no father was around. That's the excuse that come around in the ladder.
Gretchen, let me tell you a secret. You were one of the fortunate ones who were able to put it together and keep it together. Many people are not so fortunate. but that does not mean that in all honesty, you can discount the absence of your father in one form or another, no matter how we substitute for it. At the end of the day, there's still the question of what happened, no matter who we are. Because remember, God does not make mistakes. We egg things up. And so, yes, some of us are fortunate enough to quote unquote overcome it and hold it together. But many children grow up very angry, and they're not all in prison. Some of them in bad marriages with bad personalities, with bad, and all of you'd be surprised to know how much it goes back to why did my father do that? Where is he? Why didn't he show up? Why didn't he show that he cared for me? We may not say it openly, but deep down, it is impossible to ignore. We just have to find ways to put it in perspective and move on. But it doesn't discount the importance of the father and his position, because God does not make mistakes. We egg things up. See my point? But I get your point. A lot of people have been able to be successful without having a responsible father around, but that does not negate the responsibility of the father.
Well,
And the
society
problem,
they make it an issue. They made it an issue. My daddy died when I was 14, so society made it an issue. Oh, and the father isn't like make it whatever.
yes. Remember, whenever when God created this whole thing, what did he do? He created a male and female. He never created it to be out of balance. We take it out of balance. And every time we take it out of balance because of whatever decisions we make, things get egged up, either directly or indirectly. Now, all of us don't end up all messed up, but society in general ends up out of balance. That's crazy. Otherwise, he would have just created a man or a woman. But that was not the plan. And whenever it doesn't work the way he set it up, things will always get a little messy, if not on an individual level, on a societal level. And therein lies the problem. My. It's very complex, doggone it. Yeah, so we audited that situation. Thank you so much for that input, because that's something to think about one way or the other. All right. So yeah, check the opening balances to make sure they're correct. Just like your checkbook. Like if, for example, if you come to the end of the month in your checkbook and you record $350, when the new month rolls around on April 1st, what are you going to put on that new sheet, anyone? What amount?
The same amount you entered.
Exactly. Now, if you're talking to somebody when you're writing it, what might you do?
Make an error.
And write the wrong thing, correct?
Right.
Correct,
Yeah.
or transpose the figures.
Of course. And as a result of that, we're making decisions based on the wrong information, even though it was unintentional. In some cases, though, that's what we call an error. In other cases, we have fraud. Company executives actually change the numbers if they don't think the auditors are going to check. Or after the auditors check, then they change it. Amazing the things people do for money. My. What about number 2? What's the second thing?
Check the posting into the respective ledger accounts.
Why would we check the posting?
Well, the ledger is really a collection of accounts. So
Correct.
there's a possibility that what you put in there isn't correct because you didn't check, I guess, number 3, which is the subsidiary accounts.
As part of
The
the
subsidiary
process, of course. In other words, if you're not checking the numbers and the numbers are incorrect, then at the end of the day, the financial statements will be what? Incorrect. Okay? If all your accounts are correct except for cash and it's out by 5 million, then your financial statements are incorrect. Not to mention that 5 million is a big number to be out of balance. See my point? So all of these things, auditors are checking to make sure that folks are doing things correctly. They are aware that people make errors, so they try to see if they can detect them. They're also aware that people commit fraud. And so they're trying to see if they can detect them as well as they go about the normal auditing of financial statements. Okay. And again, this list is not exhaustive, but it does give an indication of those things that auditors look for primarily. Okay. All right. So when you're look at number 11, transpositions, we talked about that, very important. The numbers here are small, but they could be millions of dollars as a result of the transposition. So even when auditors are checking numbers, if it's a big number, they might just have the inclination to check and make sure there are no transpositions, because it could be. Or if there's an error in the trial balance and they can't find it, they might start thinking maybe there's a transposition error somewhere. And oftentimes there is. Okay? So just like a doctor conducting open heart surgery, the auditors in there conducting open heart surgery too, financial surgery, opening the firm up to see whether things are in order. And if whatever is not in order, to fix them or make recommendations to have them fixed. Okay? The whole purpose of the audit. And again, the audit has a twofold thing. Remember, you have the auditor, him or herself, who's doing the job, and then you have employees who's responsible for making sure the job is done properly. So all these things the auditors are looking for and looking at, they are things that are done by employees. That's you guys. So it's not like you can say, well, that's the auditor's job, I'm not responsible. We all are, because we're all there to do one of some form of those jobs. All the auditor is doing is checking us to make sure we're doing it correctly, to make sure we're not making any errors, and to make sure we're not committing fraud. And most importantly, that the financial statements are consistent with accounting principles. Okay? Absolutely. So you have a nice little list there with regards to detecting errors. And then right under that, a similar list for detecting fraud. Remember, fraud is the opposite of errors. Frauds are intentional. So when they're looking for fraud, for example, in number 1, they check everything. Because now they're looking closer. Take the vouchers, receipts, everything, tick off the major receipts against the transactions, make sure that nobody's hanky-panky. Check the salary paid to the wages register to make sure they're the same. And the money coming out the bank to make sure that's the same. This is what is considered once we're looking for frauds. Fraud by definition means intentional behavior. So when auditors come in and they're looking for fraud for any reason, they look specifically for intentional behavior to see where persons are likely to intentionally manipulate the transactions and information. Okay? For sure. And believe you me, you'll be surprised to know who's responsible for doing these things in the firm. Look at number 7, going through the details, see, not the surface, the details of unusual transactions. So those transactions that don't happen too often, they want to check everything about them. Because sometimes there are a couple of unusual transactions that when the auditors check it, they don't even relate to that firm. Somebody made them up. And the money's going to their account somewhere else, outside the firm. Has nothing to do with the firm. They're just using the firm's money to get it to their account by creating fake situations. My. The things people do when they decide to commit fraud. And notice number 9, the auditor is expected to exercise reasonable skill and care while performing fraudulent audit checks. Because they know, see, when unintentional errors occur, for some reason you don't always find all of them, but they're easier to find. But when people decide to commit fraud, commit fraud, which is intentional, somehow it seems always a little more difficult to determine. That's why number 10 occurs for those of you who work in banks. Sometimes auditors from outside or somewhere come in and conduct surprise checks. Okay, tellers shut down and they do a surprise cash count. Anybody ever had a surprise cash count as a teller? No?
I did, yeah, I did.
Yeah, how did that go?
It went well because I keep everything intact.
Way to go, Rosalie. Not all of your colleagues around the world who are tellers can say the same thing. Okay? Absolutely. If you do things right, you don't have to worry about surprise cash counts. And the reason why they do that is because a lot of fraud is committed with cash. Okay? People take it out and promise to put it back. They don't put it back. They take it out and they change information on the entries and all this kind of stuff. They take it out and promise to put it back in 2 weeks. The surprise count comes and they don't get a chance to put it back. They don't have an explanation. So the company's going to assume if you did it then, you do it. You did it a lot more before that, even though that may have been your first time, etc. The whole idea is to discourage people from engaging in fraudulent behavior. Nobody minds when you make an error. We get concerned if you make too many errors, but when we start thinking that you're being fraudulent, that's a whole different problem. Okay, for sure. All right. So if you look at page 12, you'll see that I did a little table for you to show you the advantages of an audit. God forbid, if there's such a thing. There are some advantages, obviously. Also, auditing has some limitations, believe it or not. Like everything else, not perfect. If a doctor is performing a surgery and it doesn't go well, or you bleed or whatever and die, that's a limitation based on whatever may have happened. He may have missed something crucial. He may have not clotted an area. He, whatever, just didn't get to the operation in time because the patient came in too late. Could be any number of things. The point is, there are advantages and there are limitations. And for the auditor, and even persons who are not auditors, sometimes it's important. For the auditor, it's important to know. For persons in the organization, it's important to know. Okay. All right. So notice I have 3 categories, A, B, and C. We have the business person's point of view, the investor's point of view, and then the rest of the world point of view. Okay. And I kind of set it out so hopefully you can see clearly enough the differences. What kind of question can you get for this in a test? Again, I'm not going to ask you to prepare the whole chart and fill in each A, B, and C and all that stuff. What I might ask you, though, is to, in terms of the advantages of an audit, differentiate between the businessman's, investors, and other point of view. And then you pick one and show the differences between the 3 categories. For example, for number 1, the business's point of view is find errors and frauds. The investor's point of view is protect my interest in that bloody company. And another point of view might be evaluate the financial status of that company, maybe inland revenue in terms of VAT payments or tax payments, etc. Okay. And so the audit is going to be very helpful in assessing any of these 3 things from any of the 3 perspectives. Okay. Look at 3, businessman's point of view in terms of an audit. Builds reputation. Company gets a positive, good audit. It gets a good reputation. People talk about it, say that that company is doing things honestly and above board. Okay. The investor, a good audit for the investor means that their stock and their investment in their stock is being properly valued. Nobody is fixing the numbers and the values of their stocks. The information that they're getting about their investment is true and correct. Okay. And then, of course, other persons such as a bank who might have a particular facility at that firm. A good audit means that the financial institution can settle any outstanding claims with the company, can verify any outstanding loans, et cetera, et cetera. Okay? So in each of the 7 cases, you see, for the most part, there is the perspective from the business person, the investor, and then other persons who might be interested in the firm. The key thing is that these perspectives come about as advantages of an audit, meaning that once a firm gets a good audit, then for all intents and purposes, people are comfortable and they're prepared to continue doing business. That's very important. Okay? One of the reasons why, for example, financial institutions in the Bahamas are constantly being examined by regulators such as the Central Bank, the Securities Commission, Compliance Commission, etc., is they're trying to make sure that financial institutions are not involved in money laundering, drug trafficking, human trafficking, or any other illegal activity in the Bahamas. And so these regulatory reviews are a kind of audit. They're not audits of financial statements, as the typical auditor would conduct of a financial institution or firm. But regulators, when they go in to check for money laundering and other fraudulent and illegal behavior, they are kind of acting as an auditor as well, which is why I even encourage persons who are compliance officers and risk management people, etc., do an audit class, because in a way, you're kind of like an auditor when you go into financial institution, just that you're checking for different things than the typical external or internal auditor would be looking for. Now, of course, if you're an internal auditor and you come across money laundering, what do you think the responsibility of the internal auditor is, class?
Report it.
Report it. Who do you report it to?
If you work for a firm that have an MLRO, you report it to them, or you go directly to the FIU.
Well,
Or if it's like a union, so to the board or the supervisory committee.
The what?
say it again.
Supervisor?
No, I say if you're in like a credit union, then you would report that to the supervisory committee or the board.
Yeah, typically,
Okay.
yeah, typically, if you have an MLR, well, let's put it this way. If you have a suspicion about something, the law requires you to report it to the MLRO, who will then report it to the FIU for a suspicious transaction. Now, if you come across a money laundering situation, it may or may not be suspicious. If you're not sure it's money laundering, then you have a suspicion and you should report it to the MLRO. If you know it's money laundering, then you no longer have a suspicion. What should you do then? Should you still report it to the MLRO, who will then report it to the FIU? Even though it's no longer suspicion, it's a fact as far as you're concerned?
Well, it should have the SDRs, right? And the credit union as well. Sorry, I didn't
Credit
see
union
one.
included, yes.
So
Should,
you fill out the form and you submit it.
if
And I
you,
guess,
let's say, remember, it's not a suspicion in your mind, it's a fact. You know it's money laundering. Should you still report it to the FIU through your MLRO?
you still have, you still have to fill out the form.
Yes.
Activity, yeah.
Ideally, you should. Should you
Right.
should you report it to the board?
So they have to know, but I mean,
No.
according to the law,
Well, technically, you should report it to the board. What
Well,
happens?
but what if it was a small fry like me? Why can't I send an email to the MLRO and let him report it to the board?
Oh, no, of
Well,
course.
so you
No,
could get fined, you know.
remember, you shouldn't, no, regular persons in the organization should not report anything directly to the board. If you have a suspicion, you are required to go to the MLRO.
Okay, good.
Okay, that's it. No
I'm
ifs,
sorry, what
ands,
does
or-
MLRO stand for?
well,
Money laundering reporting officer.
Okay,
And that's law.
yeah, that's,
Mr. Wilkinson,
yes.
I think Carrie Sands, I think what she's asking, or one of those persons were asking if a regular person like me, but then in this case, if you're an auditor in this case, you're not a regular person and report to the board, so you would report it to the board, right?
Who?
The auditor. You're not a regular person, you're an auditor.
No. Yeah, if it's the internal auditor, for example, or the external auditor, then they should report to the board. All right, but for other persons within the organization who have a suspicion, they should report to the MLRO. Now, let me just say this also. If the firm has an MLRO and the internal auditor or the external auditor determines that they have a suspicion or a fact, in determining whether to report it to the board, it doesn't mean that they should bypass the MLRO. That MLRO should be a part of that process. Okay, in terms of what the next reporting steps will be. And so that question is a very valid question. If the findings are from the auditor, internal or external, do we go straight to the board or do we go to the MLRO as usual? We know for sure if you're not an auditor, you go straight to the MLRO, no questions asked. The only question that might come up still, because it's not clear, if the auditor discovers it, does the auditor have a duty to go to the MLRO or directly to the board? Okay, that area is still a little gray. But outside of that, everybody else with a suspicion has to go to the MLRO. Okay, good point. Hold on it. You guys are reaching deep early. That's good. All right. As a matter of fact, because I'm so curious, I guess I'll have to be the devil's advocate again, because I have raised that question a couple of times. You don't always get a clear answer. I'll see what happens next week when I raise it again as the devil's advocate again. All right. So we have seen the advantages of the audit for different groups of people, the business person, the investor, and other people. However, we are told that there are some inherent limitations to the audit, meaning the audit is not perfect. Okay? It's not a perfect exercise. It has some limitations. So let's see. I think I've yapped enough for the moment. Let's see who can help me through this. Who's on the top of my list? Ebony, are you there?
Yes, I'm here.
Okay, great. Why don't you go to page 13, where we have the inherent limitations are. Do you see that?
Trying to find I missed an exited, so I'm trying to get back. You said page 13?
Yeah.
Alrighty. The inherited limitations are.
Yeah, and of course, we're talking about the inherent limitations of the audit. So,
All right.
let it rip.
First, auditors' work involves the exercise of judgment. For example, in deciding the extent of audit procedures and in assessing the reasonableness of the judgment and estimates made by the management in preparing the financial statements. Further, much of the evidence available to the auditor can enable him to draw only reasonable conclusions therefrom. The audit evidence obtained by an auditor is generally persuasive in nature rather than conclusive. Because of these factors, the auditor can only express an opinion. Therefore, absolute certainty in auditing is rarely attainable. There is also the likelihood that some material misstatements of the financial information resulting from fraud or error, if either exists, may not be detected.
Pick up in, Ebony, because whether you realize it or not, you've said a mouthful. That isn't going to go anywhere anytime soon. Okay? The evidence is there to persuade the auditor, but it cannot be conclusive because he's never certain that it's 100% that he's discovered everything. Therefore, and a lot of people still don't want to accept this, absolute certainty in auditing cannot be attained. We use nicer language like is rarely attained. Truth is, it's hardly ever, if ever. Okay? That's the unfortunate truth, because the auditors are not God. They're not can't guarantee you that they will detect everything. They cannot. And the fact that there might be misstatements and frauds and errors that they may have missed is a likelihood. Some pilots have pilot error and the whole plane goes down with 300 people. So if that can happen for whatever reason, it's not always the engine. Sometimes it's pilot error. Imagine that. So these guys are there with all kinds of experience and knowledge and information, but they're not perfect, nor are they God. So absolute certainty, like most other things, is rarely attainable. But they still have to go in with every intent to try to ensure to the greatest possible extent that everything is reasonably in order. That is the first and most critical limitation of the audit. It is not a perfect exercise, and nothing on earth is a perfect exercise anyway. That's the whole point. Even though some people still argue, well, if they can't find everything, why the hell do we need them and pay them that money? Some people still have that argument. The truth of the matter is the benefits of having them come in far outweigh the limitations. That's the point. Okay? Keep going, Ebony.
Okay, the entire audit process is generally dependent upon the existence of an effective system of internal control. Further, it is clearly evident that there will always be some risk of an internal control system failing to operate as designed. No doubt, internal control systems also suffer from certain inherent limitations. Any system of internal control may be ineffective against fraud involving collusion among employees or fraud committed by management.
Kiss my foot. Sorry, Ebony. I just cannot let you go without saying something. We're back to collusion. See, the second limitation, no matter how good your controls are, like for example, if you have certain, let's say you have children and a father or mother or both are trying to control what their daughter does. So they drop her to school, pick her up, take her to birthday parties, drop her to the theater, pick her up. What is the control? They're trying to make sure that they keep tabs on her so that she doesn't run off with naughty Johnny somewhere. Nothing wrong with that. The only problem is mom and dad cannot be with Suzette 24/7. True or false?
True.
True. And if Suzette really wants to get it on with naughty Johnny, somewhere in between those drop-offs and pickups, Susie will do it one way or the other. And so this is the same kind of problem that nothing wrong with the control. See my point? Absolutely. Man, I have two sons. When my sons were little, I don't want anybody to drop them anywhere. I don't want anybody to pick them up. If their mother or me or both of us could not do it, it's not happening. No sleepovers. I don't care who it is. Oh, you think your children? No, that's not it. Those were just certain controls that my Grammy taught me when I was little. I was just doing that. And it worked for me anyway, like a charm. Because most things she said worked. Interestingly enough. Okay. But the point is, these are controls that we try to put in place in order to keep things in perspective. Nothing wrong with that. Organizations do the same thing. Cash is under lock and key. Deposits are checked by two people at the same time. The person who receives the cash does not make the deposit to the bank. The person who makes the deposit to the bank does not post to the ledger. All of these are control measures to keep people from becoming creative. Remember, left alone without controls, not everybody, but sure as hell a good handful chunk of people, as we all know, will take a shot at it. Hence, limitation number 2. Any system of internal control may be ineffective, no matter how effective it is normally. When two things happen, it becomes ineffective. One, our favorite word, collusion. When two or more people get together and agree, I don't care how good your controls are, dog eat your lunch, because they now agree to do it, so nobody's going to talk on the other one generally. That's what collusion is. And once that happens, crap will go down indefinitely until forever sometimes, and you never find out. Second kind of ineffective control that auditors have problems with is fraud committed by management. See, not fraud committed by the teller, fraud committed by the cleaner, fraud committed by the supervisor, fraud committed by other persons in the organization. No, fraud committed by management, because management has access to all the information, all the details, all the instructions. Everybody takes whatever they say and obey it. No question. So if management is involved in fraud, dog eats that organization's control mechanisms. So limitation number one, the auditor cannot be absolutely certain because nobody can be that certain in life, period. And limitation number two, as Ebony said, collusion and fraud by management, man, they are hard to detect. Not impossible. Sometimes we get lucky. Sometimes one of the people in collusion, they get mad at each other for whatever reason. Somebody spills the beans, see? Talks on the other one. Stuff like that. One manager gets mad at the other one because she sees him going out with another girl, so whatever. She talks. So sometimes it comes out. But other than stuff like that, collusion and fraud by management are very hard to detect by anyone, auditors included. Serious limitations. This is the kind of stuff that if you don't remember anything else you did in auditing, you have to remember these kinds of things. Because these kinds of things are the hardcore aspects of things in auditing and in organizations in general. My. Keep going, Ebony, you brought it up.
Certain levels of management may be in a position to override controls. For example, by directing subordinates to record transactions incorrectly or to conceal them, or by suppressing information relating to transactions. Such inherent limitations of internal control systems also contribute to inherent limitations of an audit.
So therefore, for example, if your manager comes to you and asks you to change some numbers that you know are incorrect, should you do it?
No. Well, if it's incorrect, if he thinks it incorrect or.
No, he tells you to change that from 2 million to 5 million. And you
Well,
said,
no.
why? And they say, well, don't ask me. I'm your boss. Just change it. Should you
Well,
do it?
definitely no.
No.
What happens if you don't do it?
Well,
May threaten me in my job, no?
yeah, well,
Yeah, you're going to lose your job. Are you prepared to lose your job?
At that point, who knows?
yeah, because
Yeah.
integrity depends on what, if you really believe in integrity.
Of course, it depends on your belief system. Because there are some people who will never want to lose their job, especially if they're making what they call good money. And they have children and they have this and that. They need the job dead bad. They're prepared to allow those instructions to go through in order to keep their job. The question is, should they? Despite the fact that they're going to lose their jobs. Should they do it?
No.
No.
No, we shouldn't do it. Truth though is, some of us do because we panic. We need the job. We need the money. Dog eat our lunch if we lose our job. We don't know when we get another job. All kinds of things run through our minds, so we panic. And instead of doing the right thing, we do the wrong thing. I know, this is the spooky part of it. But it is real. Because people are faced with these decisions every single day. Somewhere. Okay? So are auditors. Auditors are well aware that when these kinds of things happen by management, it creates an inherent limitation for them. And no matter how strong the controls are, those two things will override the controls. Therein lies the problem. And these are what we call internal limitations. Man, those internal limitations, they stank because they come from people inside the firm agreeing to do fraudulent behavior and management who's supposed to be responsible for the company acting dishonestly and illegally. spooky as hell. It's like when you cannot trust your spouse. Kiss my foot. You cannot trust your spouse. Imagine that. That's spooky. That's what we call an inherent limitation. No matter what else you're doing, if you cannot trust your spouse, that's spooky. Just like this. My. Okay, Ebony, you started it. Keep going.
Okay, the following are the external limitations of auditing. Non-detection of errors/frauds. Auditor may not be able to detect certain frauds which are committed with malified, bad faith intentions. Two, dependence on explanations by others. Auditor has to depend on explanation of information given by the responsible officers of the company. Audit report is affected adversely in the explanation of information proved to be false.
Right.
3, dependence on opinions of others. Auditor has to rely on the view of all opinions given by different experts such as lawyers, solicitors, engineers, and architects. The auditor must rely on these sources because he cannot be an expert in all fields. 4, conflict with others. Auditor may have differences of opinions with the accountants, management, engineers, etc. In such a case, personal judgment plays an important role if differs from person to person.
Wow.
5, effect of inflation. Financial statements may not disclose true picture after the audit due to inflation trends. 6, corporate practices to influence the auditors. The
What that
management
practices?
corrupt.
Yes, that's the
Corrupt
word again.
practices. The management may use corrupt practices to influence the auditors and get a favorable report about the state of affairs of the organization. Number 7, no assurance. Auditor cannot give an assurance about future profitability and prospects of the company. Number 8, inherent limitations of the financial statements. Financial statements do not reflect current values of the assets and liabilities. Many items are based on personal judgment of the owners. Certain non-monetary facts cannot be measured. Audited statements due to these limitations cannot be exhibit true or true position. Number 9, detail checking not possible. Auditor cannot check each and every transaction. He usually has to resort to testing and sampling.
Thank you, Ebony. I don't know if you're aware of it, but the last couple of pages have been a nightmare that you created. The very dark side of auditing. Dark not meaning bad, but these limitations are real. If you didn't realize it before, hopefully you realize it a little bit better to some extent now. Hopefully company boards and organizations already recognize these real issues. It doesn't appear as if sometimes that they concern themselves with some of them, but hopefully they are. And so after coming out from a very dark set of inherent limitations, we have a very astute set of external limitations that create problems for auditors as well. They cannot detect all the errors and frauds, especially where they are committed with mala fide. That's Latin for in bad faith, intentional. And anything that is done in bad faith is a problem, including detecting it in the case of auditors. They have to depend on others, which means others might give them incorrect information sometimes, which they rely on. And it affects the audit opinion. They depend on the opinion of others, and opinion and explanations are two different things. And whether the explanation of the opinion, if they're not right, astute, correct, auditor makes a decision based on these things, he has a problem. And he's going to report this to his management, which could explain why sometimes a lot of audit opinions do not turn out to be what the firm really reflects what's going on in the firm, because of these limitations could impact it significantly. Okay. Conflict with others. Wow. Other accountants, other auditors, management, engineers, whenever they can't agree on stuff, then things get a little stinky, attitudes get a little weird, because somebody might get angry, they might not give the correct information, or they may not give the information at all, because they're mad at you now. Because you got them mad. You didn't do something they wanted you to do. You said something they didn't want you to say, whatever it is. And since that, even though they're supposed to be professionals and rise above it, personalities override even professionalism, unfortunately. And so the auditor ends up in conflict, and that conflict can impact the information and feedback, which could impact his final opinion with regards to his audit. Inflation, the quiet changer. You report some numbers, but you don't account for inflation, and the numbers are not completely correct. Corrupt practices, back to that word. The management might tell the auditors, we know that you found it, but if you report it, it's going to ruin us. We need you to change your opinion, and we'll give you another $3 million. And we'll call you back next year and give you another $5 million on top of your original invoice. Whatever the corrupt practices might be, usually bribery with money and stuff. We'll give you a jet. We'll give you a fast car. We'll take you somewhere where there are 3 dancing girls, whatever it is, or 3 dancing guys for that matter. Number 7, the auditor cannot provide any assurances about whether the company will do well in the future. Somehow people still feel the auditors are magicians. They're not. They don't know the future. So don't ask your auditor, what are our prospects for profitability and doing well next year? How the hell would he know? All he's doing is trying to verify stuff that you said you did correctly. And he's having trouble with that because of all these limitations. Now you want him to look into a crystal ball for her? Doesn't work that way. Some financial statements have historical information, which means that the information is not, the values are not current. And they're not current because accounting principles require that they not be current. And they don't become current until it's time to sell them. And the reason why we don't do that is because assets in the firm are not for resale. They are to generate revenues, not to sell. So they stay on the financial statements at their original invoice price. For those of you who may not be accounting students, just throw that in there so you can understand why financial statements have limitations as well. Okay. And then finally, last but not least, detailed checking is impossible. Nowhere under the sun, the auditor can check every single transaction. He'll be there until thy kingdom come. And no company can afford him to be there or her to be there until thy kingdom come. So he has to check using testing and sampling and judgment. And based on those things, hope that it's sufficient to give a clear, clean opinion or not. Okay. All right. For those of you who've always been curious about the difference between accounting and auditing, I just kind of put that there for you to play with. And see if you come up with any questions later on about those differences. If when we meet next week you don't raise any questions, I'll assume you understand the differences. If there's something difference between the two that you don't understand, I encourage you to raise them. That's your homework. How about that? Okay. All right, so we're back to true and fair. Well, we already talked about that.
Excuse me, Mr. Wilkinson. Sorry.
Yes.
I know the volume is a little low. I didn't hear what you just said, but homework.
Oh, I just threw that in there to get your interest. The table that I have here with the differences between accounting and auditing. Does everybody see that?
Yeah.
Yeah.
Page
Yeah.
15.
Yeah, take a look at it. And if you don't understand any of the differences, your homework will be to raise a question next week. Like, I don't understand that one. Okay, that's what I mean. It's not like real homework. Just take a look at it. And if there's something you're not clear on about the differences, when we come back next week, that we'll use that as a point of discussion. How about that? Okay.
Okay.
All right. So now we're back to true and fair. Remember we talked about that at the beginning? We're back to it. Audited accounts by independent auditors who are experts tell users outside the firm that your accounts are proper and reliable. That's why we have audits. That the accounts are true and fair. What constitutes true and fair? Well, a couple of things. Accounts are true and fair when the profit and loss shown are correct and not manipulated or changed in any way by anyone. If there's any manipulation or change by anyone that doesn't reflect the actual transactions, then they're not true and fair. Okay. Number two, when the value of your assets and liabilities in the balance sheet are true and fair. So if you say land has a value of 10,000, then it should be 10,000. You shouldn't change it to 30 so it looks better. Because once you do that, then it's no longer true and fair. That's really what we're talking about in terms of true and fair. It's not complicated. What complicates it is when you try to do unethical and illegal stuff with it. It's just like the difference between a lie and the truth. When you tell the truth, you don't have to worry about remembering the other lies. When you tell a lie, you have to start remember every single lie you said before. So it's kind of like that. If you stick to what is correct in accounting, when the auditor comes in to check for true and fair, they'll discover that everything is according to the documentation and transactions that occurred in that firm. Once people start manipulating numbers, cooking the books, colluding and all that crap, then true and fair becomes harder to determine. Everybody's miserable. That's why I say it's the difference between the truth and a lie. Man, one thing about the truth is I did it or whatever, then you just go to sleep. But if you don't tell the truth, well, I didn't really do it. I think, let's see, I think India did it. Then India says you're a liar. And then the thing starts getting mucky right away. Okay? So true and fair is easy to determine if we're doing things right. It becomes muddy and messy when we start colluding, cooking the books, and all this crazy stuff, which people unfortunately continue to do. Okay? Stick to the accounting principles. Do not window dress. That's how we keep things true and fair. And we talked about these window dressing things by senior management. Stop putting in numbers that are not there to make things look better. That's why we call it window dressing, because if you look at a window where mannequins are, they're well dressed in order to sell the product. See? And many senior management people get the financial statements well dressed too. The only problem is they're using incorrect information to show a picture that is better than it is. Wow. So now the auditor knows from experience that we have window dressing going on, that some firms do not conform to accounting principles and manipulate them, that people collude, and that senior management are not all as honest as they look around the boardroom. Any auditor worth his salt should know that. And therefore, with that knowledge, come in to try his or her best to show a true and fair view. And if he cannot determine it, to say so in his opinion. I cannot determine a true and fair view, so therefore I cannot give a clean audit. Simple as that. We'll give you 3 million. Sorry, I cannot be bought. We'll kill your children. I cannot be bought. I know that sounds a little extreme.
Mr. Wilkinson,
Yes.
I asked a weird question.
No such in this class.
So when you can start showing us some examples of these things you're discussing.
For
Now,
example,
when are you going to show us an auditor's report?
in due season, hang in there.
Pardon me?
Hang in there.
Okay.
Because, oh, by the way, if you're curious about an auditor's report, all you have to do for the moment until I get to one is just what?
Google it.
Why not? Google it. Okay, just type in auditor report and Google it, and you'll see what the auditor's opinions are and the kinds of things they say.
I Google it, but I haven't seen one from a live beam.
Oh, you did Google one.
Uh-huh.
What happened when you Google it?
I actually I am working on some reports, and some of the Google information helped me to put it in the report, because I think you have to put in scope and methodology and all those different stuff, right?
Right.
Objectives. Well, you got to put in all that stuff in the report, right? It
Right.
helped me to word some reports I'm working on now.
Of course. And as we get a little further and further, we'll see a typical one, and some other concepts will come up in support of the structure. I think that's what you're talking about, the setup. Right now, we're dealing with the conceptual side of auditing. The structural side is the easy side, even though it may not appear that way initially. All right, in terms of what goes first, what goes next in terms of a reporting process. That's the easier side. This side is what we call the conceptual side that governs our very behavior. Okay. Later on, we'll see information on audit structure, audit working papers, and that kind of stuff, and an example of a typical format. And I say typical because every auditor and audit firm, you can use a different format. When I say different format, doesn't differ materially, like outrageously different. So basically, you'll find that in a typical auditor's report, the format will be very similar. But we'll see an example of that before the day is over, before the smoke clears, for sure. All right. So with all that deep and dark stuff going on, and again, all of this happens before we get to the auditor's report. The auditor is battling with all this stuff during the process, see? And now the auditor has to determine, how do I get to show what is true and fair? What do I have to check? For the things. Is this list exhaustive? No. 15, 14, 15. Man, the list goes on and on. It's a long list for the auditor of things for the auditor to be aware of to determine whether it's true and fair. The books have to agree. Depreciation has to be done properly. The stock has to be counted. Intangible assets has to be accounted for, depreciated and amortized. And if you're not an accountant, that doesn't make a world of sense, perhaps. But again, this is just, again, to introduce you to the kinds of checking that auditors are involved in. And oftentimes, a lot of these things, even board members have no idea what the hell the auditor is doing. That's why boards oftentimes are asked to have an audit committee, which should have at least one person on it who has an accounting background. Because most persons on the board don't have an accounting background. And therefore, a lot of the audits, stuff that auditors do, like auditing intangible assets such as goodwill and patents, and doing the amortizations to make sure that they're correct and the book values are correct, they don't understand that crap. They say, man, where's the accountant on this bloody board? John, you deal it, or Mary, and come back and tell us what the hell they mean. Okay? That's how it works. Checking for bad and doubtful debts, making sure that they're correct, because sometimes financial controllers and chief executive financial officers manipulate them so that they show different numbers than actually occurred. Okay. Expenditures, making sure that they're properly accounted for, making sure they're properly categorized as capital or revenue, because sometimes we turn them around and call revenue capital and capital revenue for our own personal reasons. Does the company have any lawsuits coming? Are they recorded? Are they estimated? Are they shown in the financial statement and notes? Because sometimes folks have big time lawsuits coming, but they don't want the shareholders to know or the public to know. And so they leave it off the financial statements completely. So they know they have a $1 million suit coming, but they don't want to show it because then shareholders and others are going to get nervous. It's called a contingent liability. If they win the case, no problem. If they lose, they have to fine $100 million. So number 9 is a contingent liability. Some firms leave it off the financial statement, especially when it involves a lot of money. Should they do that? No. Generally accepted accounting principles and audit principles are clear. You cannot do that. Whatever responsibilities you have to show them in dollars and cents or as a note to the financial statement, period. You can't choose and decide what to leave out. My. But it happens all the time. Any provision for loan losses? Some companies don't want to show the provisions because the provisions end up in writing off millions of dollars as expenses, and they don't want to write them off because it makes them look bad having to write off so much money. Then they have to give a reason why they wrote them off. They have to say that, well, since we were Bank of the Bahamas, we did $500 million in bad loans. That's why we had to write them off. And nobody wants to say that. Except what Bank of the Bahamas already done, nobody could get away. The only problem with Bank of Bahamas, nobody was prosecuted. Nobody pretty much lost their job, none of that stuff. But these are things that auditors are looking for. Okay. Are there any reserves set aside? If so, how much? What is it for? Is it the correct amount? Why did you set it up in the first place? Is it necessary? See, just for one single thing like reserves. Wow. So the point is, when these experts come in, whether they're internal or external auditors, they have a huge responsibility in terms of knowledge-based stuff, exercise of judgment, and the exercise of independence and integrity. Because most persons in the firm do not understand all the details of what they're doing. And we therefore rely on the internal and external auditors to come up with their best estimate and opinion of what's going on and to tell the truth to the board, to the shareholders, to the company as a whole, to the government, to their bankers. Okay, period. Wow. Look at number 3. The auditor is required to disclose all material facts. See, don't leave out anything, even though it's negative. Whatever it is, you have to disclose it. If it's going to make people on the board look bad, too bad. If it's going to cause the company to get to run into trouble, maybe even bankruptcy, too bad. That's not the auditor's responsibility to keep the people out of the mess they created. The auditor has one job and one job alone. Come in, review the books, and report honestly and fairly and ethically. A lot of firms don't like that, but that is what is required. And it shouldn't be a matter whether they like it or not. But then again, like I said, not everybody is up to no good, but too many people still are who lead and run and direct firms and who work within firms. Okay, for sure. GAAP requirements must be followed at all times. Legal requirements must be adhered to at all times. The auditor, as an independent source, cannot get caught up in management's agenda, especially if it's illegal and unethical. They cannot. Too many people rely on them to tell the truth. That's why we study this stuff. Not only because we're auditors maybe, or auditors to be, to help us to conduct audits and write audit reports. That's one aspect of it. But the other aspect of it is to ensure that we act ethically in conducting our audits. And if we are employees, that we know and understand the importance of the work we do, that auditors are coming in to audit, period. So everybody is tied up in the auditing process. Everybody, from the shareholders all the way down to the janitor, in one form or another. Okay. And then finally, the advantages of the audit, pretty straightforward. Advantages are never difficult to understand nor remember. All right, so just take a look at them. When we come back next week, if you have any questions about the advantages of an audit, please raise them. In fact, I'm hoping that between the differences between accounting and auditing and the advantage of the audit, you might have 1 or 2 questions, and I want you to raise them if you do. Okay? Let's not forget that the auditor is not out there in left field. The auditor has to have certain qualifications and certain qualities. Please rest assured when you read this paragraph on qualities and qualifications are not the same. That's an interesting thing. A qualified auditor may not have the qualities of a good auditor because they may be corrupt, unethical, lazy, not independent, being influenced. See, they qualified, but they don't have the qualities of a good auditor. So let me see who's going to close us on the India. Are you still there?
Yeah, we have.
India, did you read last week?
Somewhat.
Okay, that's okay.
Oh, last week class.
Yeah,
Last
you did
class.
too?
Yeah, I read.
Yeah. Rosalie, did you read last week?
No, I did not.
Fantastic, Rosalie. Then take us out of this bloody class by finishing that little discussion on the qualities of an auditor.
All right, sorry if my baby makes any noise. He's
No problem.
right here.
How old is he again?
Okay. 2.
So when you get tired of him, just give me a call. You have my number. But once I take him, you can't get him back.
All right, that's fine. When this class over, I can call you. But anyways,
You wanna get a little
quality
respect?
of
No
an
problem.
auditor. The auditor is concerned with the reporting on the financial condition of companies, since errors and frauds occur frequently. The qualities required, according to Dixie, are tact, caution, firmness, good temper, integrity, discretion, industry, judgment, patience, clear-headedness, and reliability. In short, all those personal qualities that goes into making a good businessman contribute to the making of a good auditor. He must have the highest degree of integrity backed by adequate independence. Integrity, objectivity, and independence are the basic principles of the auditor. The auditor must have a thorough knowledge of the general principles of law and taxation. Practical training and theoretical education are equally necessary for the auditor to develop professional competence. The auditor should be equipped sufficient knowledge of the way in which businesses generally work and should have adequate knowledge of the client's business. The auditor who holds a position of trust must have the basic human qualities in addition to technical and academic training requirements of professional training and education. Auditors should possess a wide variety of knowledge and experience. Lord Justice Lindley, in the course of the judgment in the famous London and General Bank case, succinctly summed up the overall view of what an auditor should be with regards to the personal qualities. He said, an auditor must be honest, that is, he must not certify what he does not believe to be true and must take reasonable care and skill before he believes that what he certifies is true.
Thank you very much, Rosalie. So for
Thank
those
you.
of you who are auditors, would like to be auditors, who have to deal with auditors, and that's most of us in one form or another. If you didn't have an appreciation for the job of the auditor before, I trust by now you do have a much more significant appreciation for the job of the auditor and for the importance of the audit function to any entity, whether it's profit or non-profit. Okay, because an entity is not a profitable entity in business to make a profit, like charities and churches and all this kind of stuff, it doesn't mean that they shouldn't be subjected to scrutiny and checks, because there are people in non-profit entities who are not honest either, and their controls and their operations should also be checked. And as you can see, the auditor, as we now know him or her, must have a long list of characteristics. And certainly their academic qualification is only a part of it. And eventually it becomes a smaller part compared to other qualities that the auditor must have in order to be successful in that job. Okay. All right. So we're going to stop there tonight. Next week, please go ahead and read modules 2 and as much as module 3 as you can. I know we all have a whole lot of things going on, but what you should probably try to do, instead of reading all of it at one time on a particular day or night, just plan it, take the next 2 modules. Okay, how many pages does module 2 have? Okay, 15. I'm going to read 5 a night. And then how many does module 3 have? 12. Okay, great. I'm going to read 3 a night. Whatever your plan is, so that you can get through it with the minimum amount of stress. If you try and wait until Wednesday night, the night before class, to try and read them all, let me just try and get through the class, it's going to be a nightmare. Okay, so try to do a little bit at a time. And when we come next week, we'll pick up with module 2 and get further into this business of the audit. Right? Don't forget those 2 little bits and pieces to have a look at. If you have any questions, feel free to raise them when we come next week. Anything before we break for tonight? All right, wonderful. You guys, please be safe out there. COVID is still alive and well. Just get back next week in one piece and we'll pick it up from there. Okay?
Good night.
Yes, good
All right,
night.
take care, everybody.
Thank you.
Good night.